Hello and welcome to another MCO update on ADA. On the ADA chart, we are still in this correction that we already talked about yesterday. It's filling in the pattern nicely. I've added a nanostructure earlier today that I already shared with members on Discord. And the idea is that a C wave to the downside is likely unfolding. That was already communicated yesterday, and we might see the market trend towards 61.9 to 59 cents, maybe even a little lower. I mean, this support area is quite broad. The reason is that, first of all, the nanostructure here is not the cleanest, but it certainly doesn't look complete to the downside, this correction. In addition to that, if this really is an E wave of a triangle, it's a corrective pullback, and it can technically go all the way down to 51 cents. So as I said in previous updates, that's the invalidation point. So we have to be mentally ready for a drop all the way down to 51 cents, but I will monitor for signs that a low is in, potentially around 61.9 cents, 59 cents, and 55.5 cents. But obviously we are quite far away from that at the moment. But the increased downside momentum that we see right now does allow for the interpretation that we are in some kind of an internal third wave here. That could be this smaller degree third wave. Maybe, that's at the moment what I'm tracking, right? Because from the top that formed here on the 3rd of May, Saturday that was, we have something that looks like a 1-2 setup, and then another 1-2 setup. So this could be a third wave, fourth, fifth, in wave 3, and then another 4-5. Now, what must happen to keep the downside pressure alive and to drive the price lower into the support area, what must happen is that the market holds below the 69 cent level. So below 69 cents, the pressure is down. We could even say that, I mean, this last swing high depends on how fine-grained you like it. This would be the earliest signal that that a low has formed, a break above that 67.2 cent level, but I would rather like to see a break above 69 cents, 69.1 cents for further evidence. So yeah, trend is down. In addition to what we already have on the chart, we can add Fibonacci extensions to the chart. So we take the length of the A wave, we go to the high of the B wave, and then it would be typically the area, let's say, that you see here. I mean, maybe not even down to the 200% extension, but sometimes C waves are extended. So there is some Fibonacci confluence. That's actually what I want to show around the 62 cent level, 61, 62 cents, two levels that are overlapping there. And then around 59 cents, that's the golden ratio level. So that would be my next target, provided the market stays below the 67.2 cent level. With that analysis, you also get a level that acts as risk level, basically. So any break above indicates that something is starting to shift. Yeah, so at the moment it's sort of going in line with expectations, you could say. Also on the Bitcoin chart, I'm watching for one more low, as you know if you watched the latest video. So should go a little lower. That's how I track it. So I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.